Good morning, everyone. Welcome to this morning's edition of MPC Markets Morning Call, 29th of August, 2025. Stocks ground to a new record overnight, mainly on the surprise GDP numbers. I think it was a revision of the advanced GDP, and we had up 3% for the last quarter, and everyone was very surprised at that, essentially at the last month, but then it actually got revised up. Most people were expecting a revision down, and up 3.3. So offsets the down 0.5% for the quarter, in the previous quarter. But it does bring into question whether we're going to get those rate cuts. All eyes are going to be on the PCE revision tonight as well. If it starts to show inflation, that really does put those rate cuts in doubt. In the US, we were as high as 99% chance of a September rate cut in the US. So President Trump will not be happy in the slightest. Although Fed Governor John Williams reiterated the upcoming meetings all remain live and risk assessments appear more balanced. But yeah, they'll be watching that PCE tonight. That's the Fed's favoured Federal Reserve's favoured inflation number, and obviously it brings into focus those payrolls numbers next week, and which will be absolutely a key focus. We get a strong number there. A whole series of rate cuts possibly are in doubt there. So. The Aussie market down a little bit for the week, but we've ploughed through earnings pretty fairly strongly. If you've disappointed, you've been absolutely belted well beyond what is justified. And the upside reaction hasn't really been anywhere near as extreme. You beat by 10%, you might rally a bit unless you're in the small caps and the mid caps, but you disappoint by 5%, you get belted 15. So I think the Aussie market's been quite resilient overall. The banks held us up yesterday. The miners have managed to grind higher overall, which has obviously really helped the market here in Australia, and we've been waiting for that for quite some time. For those guys to do a little bit of the heavy lifting, we start to see, I think, ex-dividends come out from the miners on Monday, and I think Wednesday, Fortescue, then BHP, and you'll start to see ex-divvies start to flow through over the coming month overall. But the Nikkei was relatively strong yesterday. The Hang Seng not so much. That's two bad days in a row there. Euro stock's not doing a hell of a lot, but what a recovery for the Dow, the S&P, the Nasdaq, and the Russell for the week. Really, I mean, we were looking fairly grim at the start of the week, and it hasn't really got there in any spectacular fashion, but it is just ground higher over the course of the week. So, I mean, obviously we had some weaker data early in the week for the US, which buoyed rate cut hopes. And then the markets then turned around and gone, yay, we've got economic growth. So I think we're in that frame of mind where everything's bullish. We are at record highs, and although I've got to say, a lot of my social media feeds and people I follow over the last 24 hours has turned particularly sour on the AI. A lot of AI bubble talk. Sam Altman saying something around the fact that AI is a bit of is a bubble at the moment. There was some interesting figures out of how much revenue the biggest large language models are generating, the likes of Gemini and GPT, etc. GPT being the largest, I think, with about 70-odd%, but it was only around about the 18 to 20 billion mark in terms of revenue. And I mean, when you look at what's been spent, we're talking 500 billion to a trillion is either been earmarked or is being spent. And look, I mean, alone in Nvidia, you've really got its quarterly revenue of 46 billion, as we saw yesterday. So I think there's a valid point there. A lot of comparisons have been made to the 2001 bubble. I don't think they're fair comparisons, just because the Mag 7, these companies are so financially stable, and a lot of them, particularly Jensen, has even outlined in the past with NVIDIA, he doesn't want to be another Cisco. A lot of them learnt the lessons of the past, and they're much more stable businesses. And, and they're sitting on, buckets and buckets of cash. Their tax rates have never been better. They've got, global strangleholds on subscription businesses across multiple multiple platforms and cloud-based businesses. So I don't really see that it's a similar comparison. But I can see where where their head's at in terms of the market does tend to always get ahead of itself and want the results now, but Main Street just doesn't work like that. There's always a lag. I mean, we've bounced out and gone. We've bounced out in the first couple of months, May, June, July, particularly, and gone. Oh, there's no tariff effect, and we're just starting to see those tariff effects come in now. The economy just doesn't move as fast as markets, and with the short attention span investors and the market financial press has these days. By the time any effect comes through, we're 2 months past it. So that short attention span sometimes, it's been good because the market's rallied. However, we forget some pretty important things along the way, and that can be quite that can be quite damaging if we are sitting here at overvalued at the moment. But as you can see, all the technicals, apart from the Chinese indexes, are just absolutely 1 hour, daily and weekly, all in strong buy territory. So let's have a look at the US overnight. NVIDIA was down about 3.5 in aftermarket trading for quite a decent period of time. To finish down 0.8 is probably not a bad result. I still think it's fairly poor price action overall. We've seen, particularly when you've got the other parts of the semiconductor, sector, they're doing pretty well, and Google, Oracle, and Microsoft doing okay as well. A little bit of weakness out here in consumer durables and the healthcare sector as a bit more money went back into that growth part of the market. But overall, I am concerned around that NVIDIA price action, just given that was a good result yesterday. They beat expectations, and all the analysts had the H20 chips revenue in their forecasts, and there was no H20 chip revenue in the forecast or a predicted of next month of next quarter, for revenue coming in, and they still beat. The ecosystem that NVIDIA's built is super sticky, and they have, they're not going to be another Cisco. They've got a PEG ratio, which is, price earnings to forward growth, below 1. 1 is fair value. Like they're undervalued at the moment, and look, it is going to be incredibly hard, to keep maintaining these up 50% revenue results. However, as I said, they're not even in the Chinese market yet. So, look, if that market opens up, Jensen expects it to be around about 50 billion. There's more to come, and I think their data center services business, I mean, he's even said in the past that will end up being just as big as the chips are, and which I mean, let's face it, they don't manufacture anything; they just design chips. TSMC manufactures, so someone will catch up at some stage. And and they will be an alternative, and those margins will get compressed. But he's been smart enough to think ahead, and obviously buffer that company from that severe downfall that the likes of Cisco took nearly 17 years to recover back to 2001 prices from their initial fall, despite the fact their revenue numbers continue to go up. So. Now Snowflake, we saw their cloud and AI driven demand absolutely smash expectations. They're up 20% in the aftermarket. I think they beat analyst estimates by 50 million. It's 32% year on year growth. EPS came out at 30 cents a share, expected at 27. and product revenue guidance to 4.4 billion and improved its operating margin outlook as well. So massively impressed Wall Street analysts. That was reported after hours. And look, CrowdStrike as well, cybersecurity business. It was still impressive, up 5 or 6. Revenue hit 1.17 billion, up 21% year on year. EPS was 93, expected 83. They're fairly significant beats. I think the only reason they're only up 5 is they guided Q3 revenue slightly below expectations at 1.2 bill. Still growth though, and we do expect cybersecurity to be a massive sector. Defense and AI are going to be we'll go up, we'll go down. There'll be swings. The market just moves that way these days. It moves very fast. We don't have periods of sideways anymore. I've done a study on the indexes, pre 2009 and post 2009, where we've had close to zero interest rates. We used to go sideways for very long periods of time, and if we had a significant down move, it would take, I think the average was somewhere around the 500 to 600 day mark to get back to break even. These days it's 127 days. We're talking 4 months to get back to break even on the 5 biggest down moves, which the shallowest being 16%, and the worst being, I think, 34 in COVID. 127 days is nothing to recover that to break even. So I think it's a symptom of algorithmic trading, systematic trading, because momentum really does rule the roost these days. And we just don't. We're like an ADHD kid. We can't sit still. So I think this grind higher is just those algo systems pushing for lack of anything better to do. So here's a calendar for next week. Aussie market should be done and dusted for anyone significant, and you've got to be wrapped up by the 1st. So everyone who should have reported has reported. We've got Zscaler also in that cybersecurity space. We're liking the look of Broadcom next week as well. Salesforce's on Wednesday the 3rd. And you've got a couple of services businesses in there as well. Manufacturing PMI will be pretty key for the mining sector here in Australia. Out of China on Monday, well, it's over the weekend. Those figures will come out. You've got US manufacturing PMI as well on the Wednesday. The RBA governor speaks here at an evening do at around about 6 p.m. On the Thursday. And look, the big show, non-farm payrolls. I'm very concerned about this number. We've had some significant weakness, but it just hasn't shown up in the headline numbers. And I think that GDP win really is more based around, AI and efficiency gains, etc. And, the likes of these big hyperscalers, instant revenue results, etc. So, and earnings has been pretty good as well, but Trump's put the Bureau of Labour and Statistics on notice. He's fired their commissioner and installed his own man, EJ Antoni, who was at the Capitol riots. He was not in the Capitol building, but he was present, is the official line. But he's essentially he's going through the process of firing Fed members. Putting in his own players in every single government department. I think he fired the CDC commissioner, which he hired for 2 months ago last night, put in RFK. So he's getting pretty aggressive. We've got one thing of concern. I think we've got Labor Day on Monday. It's a public holiday in the States, so we'll have pretty quiet markets, I would imagine, for the next 3 days. But Congress comes back after Labor Day. Congress comes back, and they've got to deal with the debt ceiling and a potential government shutdown. So that may weigh as well. It's been talked about a little bit, but not the main focus. I think the main focus is, everyone's pretty much on hold until payrolls. So yeah. But and just a reminder about I'll cover commodities here now. Gold up a little bit, up 3 for the week. Silver around about the same. Copper's done pretty well this week. Expect that to continue higher. Iron ore's up slightly for the week. Obviously, uranium has been the big winner, up 10%, 3% again tonight, last night on Trump's announcements about, just hacking on renewables and saying we're never, wind farms will never happen, et cetera, et cetera. Lithium's had a pretty good week as well, and the US dollar's drifted off slightly, but yeah. So just a reminder for anyone who wants to register. You can see on all of our socials, etc. I'm running a live webinar next week, Tuesday, the 2nd of September, 12:30 p.m. Sydney time. You can register now. It's filling up pretty fast. I think we've got maybe 20 odd spots left. Pretty flattered at the reaction, and to be brutally honest. So thank you for those who have registered already. It really is about the next phase of AI. What resources are going to need to be used, building out the rapid expansion of data centers, where you should potentially invest for the next phase of AI, in some infrastructure plays, what will be needed. So it's on the back of a very popular structured investment we did for our clients here at MPC Markets, and it seems to be resonating, because I think people are starting to look beyond the Mag 7 and look at that, the next potential beneficiaries. So you can check our socials on X, LinkedIn. You'll find the link there, and register now. And hope everyone has a great day and a great weekend. For those of you who are enjoying the morning call, tune into our weekly podcast I do with Jonathan Takadena, Bulls versus Bears, and catch up on the week in markets with us, at your leisure over the weekend. So thanks for listening this morning, and we will chat again Monday. General advice warning. The content presented in this presentation is intended for informational purposes only and provides general advice only. It does not take into account your personal objectives, financial situation, or specific needs. This information should not be the sole resource when making investment decisions. We strongly recommend you seek the advice of a financial professional.